that in 2024 they should prepare for an enduring 18 months of economic recovery period. That is, if that is to happen anyway. And according to our guest this morning, it says that this will be accompanied by a high interest rate regime to tame inflation and continued scarcity of FX at the official markets, among other things. So to help us put this in proper perspective, we have Tilewa Adebajo, who is the CEO, CFG Advisory. Thank you so much, Mr. Adebajo, for joining us on Business Edge.
Thank you. Good morning.
The fiscal and monetary authorities are faced with the perfect storm of slow growth in the country. We're talking about rising inflation to and high unemployment rate. So do we have the right set of reforms in the country, and what would be crucial to the success of these tools if they are to be implemented?
Good morning. Thank you. As you've said, the economy is now in stagflation. And in preparing our outlook for 2024, we looked at the economic reforms that the government was currently undertaking. And while the economy is fragile, the policies and the bold reforms they're trying to implement, we think is in the right direction. The budget has come out, and from what we've said in our report, the most important thing now is the implementation of these reforms in the right way. And it's going to take a lot of commitment, and it's going to take a lot of sincerity. And we feel that if the policies are properly implemented, then I think we can go a long way to making a success out of it. You mentioned the Dangote refinery in your earlier briefing. And the Dangote refinery is a major game changer in order for us to be able to ensure that we get the economy on the right track this year. We're being dependent on importation of fuel products, which has been consuming about 10 to 15 billion in terms of subsidy payments. Now that some of that subsidy is gone, if we begin to have local production in Nigeria for petroleum products, it will help significantly, because this sector has declined between 45 to 50% over the last 3 years, negative 45 to 50% growth, which is probably close to about minus 150% growth in the last 3 years, the refining sector of this country. So if we can get that out of the way and get production and productivity back, be it local, then at least we can begin to worry about pricing later. But we now know that petroleum products are beginning to be manufactured in Nigeria. And that is what we need to repeat across board. So yes, the policies are in place. So it's now a question of implementation and sincerity, commitment.
Yeah, you said that policies show that Nigeria is on a right trajectory, and you also talked about the budgets. Let's quickly dwell on the budgets. Now, what are your thoughts about that 2024 appropriation bill and its ability to deliver a better standard of living for Nigerians? We look at the projections, we look at the revenue projections, and of course the deficits and the allocations to the various sectors. You've talked about the Dangote refinery. What about the other areas projected in the budget? Do you think that has what it takes to deliver cogent growth and, of course, a meaningful development for the country?
Well, if you take a look at the sectors of the economy that has been growing in the last 3 years, you find out that except for mining and quarry and water resources, and the banking sector, apart from those 3 sectors, no sector in the economy has experienced double-digit growth in the last 3 years, which is a source of concern. Even the telecom sector, which has traditionally been a high-growth sector, has only experienced double-digit growth in 1 year out of the past 3 years. So you're finding that there is a challenge of growth and productivity within the economy. Even the oil and gas sector, which we've talked about, had a negative growth of about 20% in 2022. And this year, we're expecting that growth to be also minus 10. So it shows you that we're not investing in the oil and gas sector also. And a lot of sectors of the economy are experiencing growth. It's even worse with manufacturing. Manufacturing is about 3 to 4% growth over the last 3 years. So this would invariably is a source of concern. So the challenges in the economy has to do with productivity. So the business climate, the investment climate needs to improve significantly for us to see significant growth. The growth projections for last year, I think it's going to be about 2%, 2.5%, and the growth forecast for 2024 is only 3% or 3.2%. Nigeria's population is growing at about 3%. So, and for Nigeria to get out of multidimensional poverty, 133 million people, we need to see our economy growing between 8 to 10% on a year. 2014 and 2011, you saw a situation where the economy grew by over 8%. And at that point in time, the studies show that inflation was between 11 to 12%, and interest rates were between 12 to 15%. So if we can go back to that regime, it shows that interest rates and inflation regime, it shows that our economy will at least grow by 8%. And that's what we should be aiming for.
Well, some people would wonder how achievable that is when there is a debt burden that is weighing down on the Nigeria's, of course, Nigeria's neck in terms of its purse and its revenue. Now, looking at the issue of debt for the country, it is a problem that probably gives the finance minister sleepless nights. So in your report, you made a strong case for restructuring, recommended that Nigeria brings its creditors to the table for conversation. You look at the case of Ghana, that's what it has been trying to do for a while. Of course, it was able to get a first tranche. Now a second tranche in discussion is ongoing, and that has been slow dragging for a while now. So in Nigeria's case, in terms of a workable plan, how do you think that will be possible? What do you envision?
Well, first of all, you need to create an enabling business environment. Okay, you're talking about having 17 trillion in revenues for this coming year. 17 trillion in revenues means that most of this is going to be delivered by your corporates. Right now, you have an EFCC investigation on 52 corporates on their FX utilizations over the last 10 years. There was a raid on the Dangote offices some time ago. We don't know if that raid, they had a search warrant, and we do not know the reason why that raid was occurring. But at the end of the day, what you're seeing is the fact that these signals are not very positive if you're looking to raise 17 trillion revenues, because it is these 52 companies that are going to generate the revenues to pay those sort of taxes that will help you. So you need to, first of all, improve your business environment. That is very important, because once you have a favorable business environment and you have a favorable investment climate, then you can attract foreign direct investments. Right now, foreign direct investments is less than $500 million, the lowest in a long time. So at the end of the day, you find yourself in a situation whereby this thing is quite difficult. And at the end of the day, you need to be able to ensure all these things are happening, because you are using 98% of your revenues to service debt. And to make it worse, by next year, the debt servicing amount is going to be 11 trillion, which will be more than your capital and recurrent expenditure. So right now, we do not have a very wide margin of error. So we need to be able to ensure that our revenue profile is intact. And the way you do that is that you create the enabling business environment. 2 companies are already leaving Nigeria. They're leaving Nigeria because the manufacturing environment is not conducive. They want to start importing their goods here. So you need to take a look at your local manufacturers or the local companies who are investing in Nigeria and support them to ensure that the revenue profile is intact. And it is only when the economy is growing that you can achieve high levels of taxation. With 3% economic growth, your ability to collect taxes are going to be limited. So that's why it's important that you begin to take a look at your debt profile, both local and domestic, and beginning to think about how you're going to restructure that debt profile. It's very important, because if you are harassing businesses, then it's not going to augur well for you, because businesses will be afraid and they will not make the necessary investments.
Well, we actually know that one of the things the Nigerian government has been trying to do to ensure that the environment is conducive for players and for businesses is to ensure that the CBN clears a backlog of some FX forwards so that, of course, they will be able to have access to it. But then you seem not too optimistic about the dollar supply, of course, for this year. So can you actually share more insight on what we are to expect and how the government can earn more FX moving forward?
Well, the CBN has been doing, a good job in terms of the confidence. At least they've been making some payments, and I think it's been gradual. They've been consistent with their payments. So if you begin to track all their payments over the last 3 to 4 months, you'll find out that they have a trend of payment. They have a method as to how much they'll inject regularly. So if they continue to make these payments, and so you can now begin to see that within 6 to 9 month period, if they continue at this pace, probably before the end of the year, they can clear the backlog, which is good. So at least you understand that there is a level of commitment which they have made to show and signal the market that there's going to be commitment to that repayment. So that is a good signal to clearing that backlog. So in another 9 to 10 months, if that has been reduced significantly, it sends a strong signal. Then at least that backlog has been cleared, and then you can now worry less about that to ensure that you do not create another backlog. So next time, there will be no more backlogs. If there's no Forex, then you do not pay. So hopefully by second to third quarter, by the third quarter of the year, when we begin to see if they are consistent with these payments, then we can begin to see some relief in terms of the foreign exchange rates. And let's hope that the demand also is going to spike up because companies need foreign exchange to be able to grow the economy. So there's a balancing act that needs to be done with the foreign exchange mechanism. But like I said, it's a marathon. It's not a sprint. So it's going to take time to clear that. Then our oil production also, you're looking at, is creeping up gradually. And like I've said also, this Dangote refinery being a game changer in terms of bringing products here will reduce our import dependence and will reduce our dependence on foreign exchange. So hopefully, if this happens, then we can begin to see those sort of corrections you're talking about. But it's a question of time. So it's not that I'm not optimistic about it, but what we're saying is the fact that it's not something that's going to happen in the first quarter or the second quarter. Let's begin to see what happens by third, fourth quarter of the year.
Finally, to just wrap things up, analysts tell us that this is going to be another difficult year for businesses in Nigeria. And you are actually advising business owners to hedge to preserve value. So could you please speak to that point and help us understand it?
Well, what we're saying is that you have a situation whereby inflation is at a runaway phase and real rates are negative. That means that inflation is higher than interest rates. So real rates and real yields are negative. So that's why we're destroying value. And the whole essence of value destruction is the fact that people will put their money in other assets, including foreign exchange, to be able to restore or retain some sort of value. So apart from that, these high levels of inflation at close to 30% is also a factor that is responsible for the increased demand for foreign exchange. So if the central bank's monetary policy begins to increase rates, which they're beginning to do through the open market operations, which is OMO, getting to 20%, then we expect that over the short term, within the next 2 or 3 quarters, interest rates will go up significantly to restore value. So if they do that, we'll expect the demand for foreign exchange to go down. And of course, people will begin to save in Naira because they're beginning to make real positive returns.
All right. Now, Tilewa Adebajo, CEO, CFG Advisory, thank you so much for your insights on the show.
Good morning. Thank you.
It's a pleasure. Navigating through stagflation is a complex task, I must say, but economists, as Adebajo has also said, with a comprehensive and well-coordinated approach, Nigeria can unlock its economic potential and achieve more in the new year, while, of course, attaining sustainable growth for the country's economy. You're watching Business Edge. We'll go on a break. We'll be back with more.